All right. Good morning, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. We're going to take a look at the markets. Bitcoin is still struggling a little bit. We're going to dig into that, and along with all the other charts. So, without further ado, let me just grab your live chat, and we're going to go right into screen share. Debating where to start today. Let's start with the stock market as people, trickle in. And then we'll talk about Bitcoin for the live viewers. All right, your chat is here. Let me grab that. Though I don't usually keep an eye on it. I try to focus on the charting. However, we will do our best. All right, let's do this. Right there, not much to say about the S&P 500. This is the weekly chart of the markets. As you can see, we have made it to a brand new high and we are in the resistance zone. Today is already Thursday, and markets don't normally top on a Friday and crash on a Monday and start a downtrend. That doesn't normally happen. You can see it. Well, it kind of happened here, but the market was already going down. Like, we didn't end the week at the high is what I meant. The market has to usually already has a problematic candle before things go bad. You can say that, hey, Tone, right here, we had a local top, and then the next week it was pretty bad. But there's two things in this week. First of all, this is a reversal-ish candle being a doji, even though it's not a scary doji. But the other thing is that week we kind of went and closed the gap before going down. So you had a chance to still properly, without much damage, get out of the market if you were nervous. Same thing here. You see how the top was made right on this candle and then we fell. So it's kind of rare to close the week on a very, very bullish candle. And this is a bullish candle, even at resistance, and then have a catastrophe happen as of Monday. It's rare. I'm not saying it doesn't happen. I'm just saying that it's rare. So if the market closes with this candle, I'm not going to be, pessimistic going into next week. And this rally could go further. Man, imagine if this rally goes to a new all-time high before the reality of the current economic disaster happens. That would be that would probably be the ultimate broadening top, the complete ultimate broadening top. In which case, unfortunately, I cannot bring Tyler Jenks in, but I can bring in Socrates. You can already see this broadening top happening. But the question is, will we have one more swing higher, into next year before the eventual disaster happens? So this would be incredible if we can swing to new all-time high. I mean, people would be in complete and utter disbelief. I still have my long positions. One of those long positions is in Uber. Got into Uber on the break of the triangle. I love triangles. We got into Uber at the break of the triangle, somewhere around here during the options workshop. You can see how that position did go into negative when Uber pulled back, but right now it's sitting right at resistance. I would love, a green 2 above a green 1 today. That would be very bullish for Uber, breaking all kinds of resistance, and it's going to be great. So that's what I'm looking forward to. I'm not ready to exit this long trade yet. And my target, and I normally don't have targets, but in this particular trade, since it's a spread trade and the options, people that were in the options class are watching, our target is $40. But that doesn't mean we're going to wait all the way till 40. So I would probably exit this trade if Uber got to, say, $38. That would be a 60 or a 70% return on the options trade, which would be great. So you're entering here around $30. The stock moves $8, and which is what, maybe 20%? 5 times, not even. Maybe a little more than 25% or so. And stock moves 25%, but your options trade makes 60%. And that's the beauty of options trading. But of course, it comes with risks. All right, let's move on. to others. Let's take, oh, here's the daily chart in the futures market. You can see we're consolidating near the top. That is not how tops are made, guys. I'm sorry. This is a reasonable top. That's a reasonable top. But this right here, yes, it was at a Fibonacci line, but multiple touches of this resistance made this tricky. So right now, what I'm noticing is a repeat of this situation, and this area was eventually broken. So at the moment, this does not look like the S&P is ready to top this week, and we'll probably have some more upside. So I'm not in a. I mean, I don't want to enter any new trades, but I'm not yet in a rush to exit my to exit my current long trades. I mean, they're still maybe becoming more profitable. So I will be looking for a top in oil sometime tomorrow. So tomorrow or the next day, I will be looking for a top in oil. Well, the next day is Saturday. So sometime between today and Monday, I think oil will probably be exhausted. The counts are getting close to being exhausted, and we're going to keep an eye on that as we go through these videos. Silver pulled back a little bit. I'm still a little frustrated how much silver went up off the break versus gold, because I was in the gold trade and not the silver trade. Last time I chose wisely by going with silver. This time I thought that gold would be the better option. Clearly silver was. I'm still in the gold trade. It's still struggling here, but it's now forming a consolidation near the prior swing high, and I'm still bullish gold. I'm still bullish gold right here. I will raise this line next week. I mean, as long as we close the week above 1750, I will be bullish gold into next week, and I will have no reason to get rid of my long exposure to gold, even though I already took half my profit near the top of this green candle. Should have exited the rest, but hey, shoulda, woulda, coulda. So I'm still holding long exposure in gold. All right, guys, please like, please subscribe. How many live viewers? I have a YouTube is not okay. 600. The screen that I used to use to tell me how many live viewers I have is really terrible right now. All right, we're at 600 live. Excellent. Please like, please subscribe, please share. All right. Let's move down the line here. I am keeping an eye on minor profitability. I'll probably be keeping an eye on this chart a little bit longer. I want this to like fully work out itself, and I want to see if we're going to be pulling back in the price of Bitcoin. Minor hash rate, we had a difficulty adjustment to the downside, and I believe there's going to be another one. The GBTC premium is still kind of high. So I have not, I really wanted to enter the Bitcoin long trade off the break of the triangle, but I never did. Bitcoin never got it for me. This is why it's important to have rules. I was watching this triangle, probably one of the first people to point out the triangle, and I was really, really encouraged by the potential of this triangle breaking out. And then the news breaks that someone that mined a month into the Bitcoin protocol moved a few coins, and people start to panic, which shows you the problem with Satoshi potentially actually coming out and saying, yes, I still have access to my coins. The markets will certainly panic. And this panic is still happening. I fudge this triangle as best I can, but I don't think I can do it anymore. No, I can still do it. I will continue to fudge this triangle until I no longer can. In fact, the triangle to right now, this second, is actually even better than the triangle I drew yesterday, because this point is perfectly valid, because I am touching a wick or a shadow without breaking the body of the candle. And guess what is happening right here? I'm once again touching two more candles without actually breaking the bodies of these candles. Now, I love to get 3 touches here. So this means that we kind of extended a little bit. Let me, like, this triangle is really extending now, really extending. And that means that we could consolidate all the way into the end of month before the potential breakout. So I still believe that this triangle can do its job, but at the same time, I'm also looking at the daily chart, which has just flipped to be negative. So once again, we are pulling back. This is a double top-ish scenario. I want to take a look at the BitMEX funding rate. And look, the BitMEX funding rate is starting to favor the bulls once again. So this is great for the bulls. Everyone is asking me about the golden cross. The 50-period moving average has crossed over the 200-day moving average. That is a bullish sign. However, there is a difference between a bullish sign and a tradable sign. Notice how when the 50-period moving average crossed the 200 to the downside, look how far away from the crossover the price actually was. And therefore, this was a bearish sign, but not a tradable bearish sign. And as you can see, even though this was a bearish sign, the price continued to rally. Now we're crossing over to the bullish sign because the price is so far above it. It's not a tradable opportunity. And it doesn't mean that the price is going to go higher. It raises the probability that the price is going to go higher. But the price could go down and break it to the downside the way we did it in the opposite direction right here with this moving average break. Same thing here. The price is where we crossed over to the bullish side in the crossovers, but we were already topped. The momentum had ended, and we were already going down. Your lucid SARs were pointing to negative side. The counts were pointing to negative side. So everything was pointing to the downside here, except the crossover. The crossover tends to be a little bit late. So going by the last two times we've had this crossover, it actually created the exact opposite of what it normally does. So does this mean it's still going to create the opposite? Does this mean that that if the last two times the crossover had the price go in the opposite direction of what the textbook says? Of course, it's possible. And right now, the daily chart is telling you not to short, not to long. It's telling you to stay in cash. Now, if tomorrow we are breaking the lows of today, that becomes a potential short trade on some systems. Okay, let's move on to the weekly chart. Here's a look at that weekly chart. And you can see that the trend line is perfectly doing its job. The trend line is doing exactly what it's supposed to do. I keep fudging this trend line to be as conservative as possible. And if we pull back right here, hopefully we pull back in an orderly fashion to get to a topping opportunity. But either way, the trend line has done its job, and we are pulling back right here. And finally, looking at Hyperwave, Hyperwave is still doing its thing. Look, the higher level counts are still calling for consolidation. The short term, being the 4-hour, is calling for a potential breakout. I will always trust the longer term before the shorter term, but you need the shorter term to kick off the domino effect of the higher level time frames. Think of it literally like dominoes. There's really interesting videos where a domino will cause another domino, I think half its size, up to half its size, to tip over. So if this is like a large heavy domino, as long as my domino in front of it is, I think, half or 2/3 its weight, I can tip that one over and it will tip this one over. And so there's like crazy YouTube videos where you start with a domino about this big, and then like 8 or 12 doublings later, you're knocking over a domino that's like multiple tons of weight that would like kill you. So you start with a domino like this that you could like crush in your hand, and it knocks over something double its size, and that knocks over something double its size. and then eventually you have like a house falling down. It's the same thing with time frames. You need the small level time frame to kick off the changes in a higher level time frame, which kicks off the changes in a higher level time frame. And that's why we still pay attention to the low level time frames, even as a trader of the higher level time frames. Okay. I want to find that video. I'm going to Google it on another screen. Domino. Well, I don't know how to Google for this. Domino knocking over larger dominoes. It's a really, really cool video. Yeah, here it is. Found it. It's really short. I'm gonna it's only 1 minute, but there's like a 2-minute video and a 1-minute video. Short version. Beautiful. Let's do the short version. Excellent. Check this out, guys. Trading is no different.
Everybody knows about playing with dominoes, but what you may not know is that a domino can knock over another domino, which is about 1.5 times larger.
Wow, 1.5.
What I have here is a chain of dominoes. Each one is 1.5 times larger than the previous one. And the smallest domino is about 5 millimeters high and 1 millimeter thick. And I will carefully place it. And there are 13 dominoes. And the largest domino, it weighs about 100 pounds and is more than 1 meter tall. Ready? Boom. That was 13 dominoes. If I had 29 dominoes, the last domino would be as tall as the Empire State Building.
All right. So just think about that. Just think about the reality of that situation. And trading is the same. It all starts at the low level time frame, but it's the larger time frame that you really, really care about, because no one cares about a 1 millimeter domino falling over. But a lot of people care about a domino the size of the Empire State Building falling over. And if you're not paying and at some point in that sequence of 29 dominoes, you got to realize to get in and out of the market. You get in if the dominoes are happening to the upside, and get out if they're happening to the downside. So this is why we pay attention to the lower level time frames, even though we only trade the big ones. I thought that was an awesome video. I saw it a long, long time ago, and it really resonated with me. I am going to upgrade my computer. I know which computer I'm going to buy, but it's not released yet. I think it'll cost me about $4,000. It will do the job. It better do the job. It will be a gaming laptop. That's a funny comment, John Stockton. I have to like I'm laughing at it, so inappropriate, and I made it visible, but it just cracked me up. Thanks, man. Where my internet goes out. Beautiful. All right, let's get back to screen share. Actually, yeah, let's get back to screen share and take a look at the questions. Like, I don't even want to tell you guys what computer I'm getting because it's actually going to be high in demand and I don't want it to get sold out. So after I buy it, I will tell everyone what I bought. But I don't want to say it ahead of time because I don't want a flood of people preventing me from getting it by like a month. Because like good laptops, I mean, they're always freaking sold out. Why a gaming laptop? Because they're the only ones with enough power to handle what I do. Okay. Question. I don't really. So I'm planning to launch the Q&A subscription service soon, and that's when we're going to be taking a look at stocks. I'm trying not to talk to too many stocks. So I was long the. Oh God, no. I was long this thing. When did I get out of this trade? Oh, that sucks. Guys, please don't show me stocks that like triple up after I get out. Oh, wait. Did they reverse split? Did they do a reverse split? They did. They did do a reverse split. I thought it was a cheaper stock. But look, 2 days later, geez, look at that rally. Wow. Wow. Yeah, I got out before the reverse split because I don't like reverse splits. So I got out once they mentioned the reverse split. So I got out. But hey, you know what to do. Look at that. Look at that. You know what to do. All right. Wow. Okay, Tone, gold, metals are down, stocks are down, Bitcoin is down, bonds hardly bid. Well, okay. So look, the market is down, what, 0.3%? That's nothing. Oil is up. The silver is down a tiny bit considering how much it went up. Gold is just flat for the last 5 days. So Bitcoin is, let's be realistic here, right? I mean, what's Bitcoin doing? Down 3% on something that has gone up like 300%. So it's not that big a deal. It's not that big a deal. And nothing's crashing. It's just consolidating. Nothing bad is happening there. Tone, feels like the bottom is about to fall out of Bitcoin. Or where's the bull's best shot at support? Well, yeah, right here. I wouldn't say that the bottom is ready to drop. There's nothing about this triangle that tells me that the bottom is ready to drop. Even the 4-hour chart has plenty of support. Here's a support line at 8,800, and here's the moving, the 200 period moving average at 8,600. And by the time we get there, they'll probably be in line around 8,800. So I'm not gonna go and say that it looks like the bottom is ready to drop out. The daily chart is consolidating near the top, and the weekly chart is just sitting at resistance. The bottom is ready to drop here. Like this is when you start making this giant triangle, that's where the bottom is ready to drop. To be honest, I thought the bottom was ready to drop right here when we broke below 7,700. I expected us to go all the way down to here. I was kind of wrong. We rebounded from the $6,300 area and went up. And this is the other place where I expected the bottom to drop. I don't expect the bottom to drop when you're flirting with a breakout. That's not that's not how I define a bottom dropping. So, however, if we go down here, well, if we go down here and rally back up, we're going to make the ultimate head and shoulders on a weekly scale. But if we don't go back to the tops and we end up forming this massive, and I mean massive, descending triangle, which is going to be a challenge because this is not exactly, this kind of broke it. But if we start making a descending triangle here, then the bottom could drop out below 6,800 sometime next year, which I'm not expecting to happen, but the possibility is always there. So where are the bulls have support? Well, I think bulls have great support all along the way. There's lots of support between anywhere between 10 and 6,400. Right now, that would be 6,000. There's lots of support all throughout this area. So Bitcoin could really bounce from any point. There's lots of support at the moving averages. You've already proven that. There was support at the former breakout area of 7,200. Whatever this line is, that's the $6,000 line. There's lots of support. I'm not expecting Bitcoin to go below this area, and I have bets with my friends on that front. BTC sitting at the bottom of your triangle. Is this a good place to take a stab and buy? No, it's not. It is not. It is never. Well, I'm not going to say never, but look, I know some people like buying off of trend line bounces. I don't. I like to buy off triangle breakouts. I would rather buy at 99 than at 93 as a trade. Now, this is where people get very confused. As a trader, I would rather buy here because my probability of making money on a trade is much higher. As a hodler and a dollar cost averager, I would obviously rather buy at 93 than at 99. So you have to separate what is the reason for you buying it. Are you buying it as a trade, and how much time, what time frame is that trade? Or are you buying it as a long-term hodl? If you're buying it as a long-term hodl, sure, this is a great place to buy. Yesterday was a great place to buy. The day before was a great place to buy. As a long-term hodler and a dollar cost averager, the lower Bitcoin is, the more you want to buy it. But as a trader, especially a leveraged trader, you don't want to buy here because you don't know which way it's going to go. But if we're breaking 9,900, I have a pretty damn confident idea as to where it's going to go. And I can enter a 20x trade, a 30x trade, a 40x trade, a 50x trade, doesn't matter. Okay, that's me based on my risk tolerance, because I'm entering that trade because I know what my risk is. The closer we get to the edge of the triangle, the less my risk is. So I can enter with high leverage and have a very tight stop loss because I know when I'm wrong. But if I'm entering here, the only way to enter this trade is with zero leverage or buy spot or maybe 2x leverage. I wouldn't go more than 2x leverage here. But here, I would go way higher leverage because my probability of success is much higher here than it is there. I don't know how else to explain it, and I don't want to promote leverage trading. It's dangerous and you need to know what you're doing. So it really depends on your reason for buying. It really depends on your reason for buying. And this applies to any asset, not just Bitcoin. Sure. I trade NVDA all the time. I mean, there's nothing I can say about this. Like, if you didn't enter in the last few days, like, I wouldn't enter now. Oh, wow. Wow. Look at NVDA go. Thank God this trade worked out for me really nicely. So this was one of my better trades. And this was another trade that we did in the options class. Towards the end, I entered a small position to educate people on how to navigate a broker and enter a trade. And this trade would have had a max profit on this day on May 1st. And the closer the price was to $280, the more profit that trade would have made. And as you can see, I nailed that one pretty damn well. We entered this trade a week earlier. We entered the trade on a Monday. That was Monday. And the way the trade was set up, it was either if it goes up to 315, it maximizes your profit, or 280, it also maximizes your profit. And we hit the 280 right on the button on the day of the exit. So talk about getting price and time perfectly correct. So this was a very nice trade. I got to check my spreadsheet. I think it was like a 30% gain or something like that on this trade. So it's pretty good with very low risk, I might add. Very low risk on this trade. There was a very small probability of losing money. All right, I got a few more minutes. I got maybe 5 more minutes. Right now, it's toppy. I would not be entering Nvidia right now. If I was in Nvidia, I would be looking to take profit right here. Clearly, this is not a situation where I want to be entering. You can tell by all the red arrows. Okay, a few more questions. Tone, do you suspect an exodus will occur from high tax? Fiscally irresponsible blue states. Yes, of course. Now, it's really hard to move out of states like California and New York. New York has a lot of jobs, and California has nice weather and tax jobs. So it's hard to move out of California should be its own, the Socialist Republic of California. It really, really should. It should be its own country. It really, really should. Now, people don't really want to move out of those areas. But Chicago? Oh, man. I don't understand how anyone lives there. Your weather is terrible. Your taxes are insane. Your pension system is dead broke. I don't get it. I'm sorry, guys. Illinois, I don't get it. Like the state of Illinois, why do people live there? I don't understand. I don't understand. But yeah, like half of all of the Bitcoiners in America live in Austin, Texas. Like, there's a reason for that. Florida's good, Nevada's good. Get out, especially when you're working online. Like, you're not obligated to live somewhere. You can have apartments in multiple places. Just read the tax codes, right? If you have a job online, you can work from anywhere. So you become a resident in a state that with better tax advantages, and check the state laws. I know most states, you have to be in that state for more than half a year for them to claim tax jurisdictions. Not all, but most. Like, just you got to check your tax jurisdiction. I'm not an accountant or anything like that. When are Bitcoin fees going to go back to normal? Possibly never. We need to start teaching people how to use Lightning. Possibly never. Look, it's like saying, hey, this restaurant just became very popular. When is it going to be empty again for me to get a table? But if the restaurant's popular, it's never going to be empty enough for you to get a table. You're going to have to pay more. Or reserve it earlier, or send your transaction a day earlier. So it's possible Bitcoin fees will never go down. That's because people want Bitcoin. There's another aspect to Bitcoin fees that people always forget. Bitcoin is denominated in Bitcoin. That may sound silly, but it's not. Your fee is denominated in Satoshi. A Satoshi is the lowest unit of Bitcoin. So imagine if a price of Bitcoin goes up 10x. The price of one Satoshi also goes up 10x. When your transaction fee is priced in Satoshis per byte, and that transaction costs you 100 or 200 Satoshis, if each Satoshi is now 10 times more expensive, your transaction just became 10 times more expensive. Not because the transactions were more expensive, just because they're denominated in that currency. Okay. So, for example, if you put a soda machine in India that only takes US dollars and the Indian currency crashes, you still got to pay the dollar to get the soda. Like the price of the soda didn't go up, but it went up for you. So the transaction fee is denominated in Satoshis per byte. The number of Satoshis to get the transaction in is not going to change. But if the value of that Satoshi increases in dollar terms, then you feel like you're being ripped off because you're on the dollar standard. If you're on the Bitcoin standard, like if all your money is in Bitcoin, then, and you have 10 Bitcoin, for example, and your transactions cost you 200 Satoshis, they will always cost you 200 Satoshis, whether that 10 Bitcoin is worth $100 or $1 billion. So you got to think of it in terms of the currency. If you're in America, the soda, well, it's not probably not $1 anymore, but if you're in America, that soda is always $1. Your reference is the unit of account is $1. So when shitcoins claim that their transactions are cheap, that's because they don't tell you. Like let's look at Bcash, for example. So the smallest unit of Bcash is the Vays, and that is 1/100 millionth of a Bcash. So one Vays is approximately 97% cheaper than one Satoshi, and therefore your Bcash transaction fees will automatically be 97% cheaper, just because the smallest unit that the transaction is priced in is going to be cheaper. Okay. So there's multiple things there. And Bitcoin is popular right now and crowded right now. And no one wants to use SegWit for some reason, which makes your fees more expensive. All right. I got maybe one more question. Any thoughts on recent news? Any thoughts on recent news of companies like Coinbase, Twitter, and others, tech darlings, all going 100% remote workforce? It's going to be more efficient, maybe. It's going to be more. Look, if you find a good employee that can work from home, it increases global efficiency by God knows how much. It helps the environment by God knows how much. Let me not get into the whole environmental debate, but working from home helps the environment. Now you got to find good people to work from home. My old boss on Wall Street. Wow. If there was ever, if I ever become Bitcoin rich, and I wanted to help Bitcoin development, I would go and find a man named Natu. not his real full name, but Indian names can get to like 85 letters long. So we all called him Natu. And Natu is probably the smartest developer I've ever met. Not counting top 5 Bitcoin developers like Maxwell and Luke Dash and Peter Willem. And Natu would get more work done on his day off than most other people at the company. He was that good. And I'm not joking. Like even when he says I'm taking a day off, he still reads emails, and then people are like, man, I've been trying to solve this thing for like a week. Can someone help? And then like an hour later, Natu is like done. Like so I would just like, if I was really rich, I'm not going to name any names, but if I was rich like some of the other people, I would just call him and I'm going to be like, how much are you making right now? What if I pay you 1.5 times more? He's going to say, okay, what's the job? And I'm going to say, go be a Bitcoin core developer. That's it. I'll pay you. Let's do a 3-year contract. Well, I don't know if he'll take that job. I'd have to, set money aside. 5-year contract. Your first year, you're going to learn and you're going to read the Bitcoin code. And in your next 4 years, help. Here's your job. Keep Bitcoin decentralized. Keep fees low. Make Bitcoin faster, cheaper, more private, without infringing on its core principles of censorship resistance, unconfiscatability, value transfer. So just go and help, and I'll pay you. And that's it. Now, if I make this public that I'm paying a core developer, there's going to be conspiracy theories left and right. So I would probably do it in private. And then if that comes out, then it's going to be conspiracy theories left and right. But the point is, my ultimate goal to help Bitcoin when, and hopefully when I become wealthy, is to go and find the smartest developer I have ever met in my life and pay him to help. That is what should be done. Adam Back actually tweeted something like this. We're going to go to Adam Back's Twitter. God, if I keep calling him Satoshi, he's going to kill me. Adam Back, Twitter. I don't know why it's not coming up. Boom. I don't know if he replied with a tweet or... What is this? Oh. He wrote something about, here it is. I love this tweet. I need to retweet it right now on camera. I love the tweet. I try not to retweet too much. I try not to spam with my Twitter. But I mean, he's right. He's absolutely right. Look, ICO founders arguing with each other about who's scammier. Just said about dumpster fire. Misallocation of capital. If all that money, instead of trying to scam you, instead of creating scammy projects, instead of creating, garbage centralized blockchains, if only that money was used to help Bitcoin, we would probably be on the moon with our Bitcoin right now. And Adam Back's right. Adam Back's completely right. Okay. Like all this misallocation of capital. So if I had extra capital, the best thing I could do for Bitcoin is find the smartest developer and pay him to just help Bitcoin. All right. I guess that's a good note to leave on for the day. Yeah, Nvidia has earnings today. Remind me to take a look tomorrow. I mean, looking at it the day before earnings is no good. I never hold a stock through earnings unless my trade is specific to earnings. All right. That's it. Oh yeah. So I'm not going to talk much about remote working. I think that's the future. But you just need the right people. In the future, people are going to be working from home. I have other ideas, but we don't have time to talk about it because market is opening, and I kind of want to get in front of the market again. I'm still not done exiting all my positions. So we're going to end it here, guys. Once again, thank you so much for watching. Please support. Check out tonevays.com. Check out the on-demand webinars. Check out the store. Check out the affiliate page. And thank you so much for watching. And I will see you all on the next one. Bye, guys.